As a small business owner, it's getting harder to turn a profit while still offering the kind of benefits that help you attract and retain the best employees. In fact, insurance costs for both individuals and families have risen 22% in the past 5 years and 47% in the past 10 today. Insurance benefits represent nearly 40% of your company's total costs, and there's no sign they'll stop growing anytime soon. But what if your decision to purchase employee benefits was more than an expense? What if it could actually be a financial advantage for your company? It can be, and we can show you how. Thanks to a little-known law, there's a way to control your costs and even create additional assets for your company while doing it. The Employee Retirement Income Savings Act, ERISA, was passed by Congress more than 30 years ago, and it provides you the opportunity to create your own self-funded employee health care plan. You'll save money because you can choose the benefits you can afford, and you'll have the kind of control over your benefit spending usually found at much larger companies. So, how does a self-funded plan with USMGU work? How can it save you money? It's actually pretty simple to begin. You create your own plan, custom designed for your company. You make the decisions on what you need, including administration benefits and costs. And instead of paying your insurance company every month, you keep your money and deposit a set amount in your company's claim fund. This amount or level per employee does not change. That is why it's known as a level self-funded plan. A level self-funded plan has a number of immediate advantages. First off, you know what you'll pay each month regardless of what you pay out in claims. This helps build a smarter, leaner budget. Plus, a level self-funded plan lets you build your claims fund as a business asset, helping you increase the value of your company. And best of all, you keep the money left in your claims fund at the end of the year. This can be a significant amount. On average, 93% of employees use less than $2,500 per year in medical expenses. Why pay for benefits you don't use? Each year, you roll over the remaining claims funds, invest them, whatever makes the most sense for your business. After all, it's your money, and if catastrophic claims threaten your claims fund, our plan claims excess stop-loss coverage that pays claims that exceed your claims fund's monthly responsibility. They'll help you pay the claim and stay within your budget. Now, you may think this all sounds good in theory, but how does it work in practice? We are glad you asked. We'd like to walk you through a real-world example featuring a small Florida company. We helped realize the financial benefits with a level self-funded plan. A Florida company has 38 employees. A traditional insurance plan would cost roughly $18,600. With the level funded plan, the company has budgeted $13,300 per month for health benefits. That's an initial savings of $5,300. With a traditional insurance plan, the entire budget, more than $223,000 a year, is used just to pay the premiums. And remember, all that money goes to the insurance company, regardless of whether it's used to cover claims or not. Now, let's take a look at what the same company now pays. With a level self-funded plan from USMGU, their budget remains the same. The company decides to contribute half of the benefit costs for its employees, while the employees cover the other half, plus the cost of covering their dependents. The employees contribute $7,400 each month. The company adds $5,900. So with the employee contribution, the company has gained an asset of $5,300 in the claims fund. This means that in a month with no claims, the actual cost of benefits is less than $16 per employee. The $5,300 that remains in the company's account each month is used to pay eligible claims. In other words, the amount available for claims during the first year total, $63,600 in any given year. It's hard to know how much we will have to pay out in claims, but if managed correctly, the company should be able to save a portion of this balance. In fact, USMGU clients have retained as much as $100,000 a year, and many have been with us for over a decade, enjoying continued coverage and savings year after year. So why give your money to an insurance company when you can save on insurance premiums and build your company's assets in the process? Get in touch with the USMGU rep now. It's one of the smartest financial decisions you'll ever make.